Okay, we've got ratcheting up trade war rhetoric against China. The EU is now threatening to slap reverse tariffs on us. So we're kind of both sides of the ocean. We've got this Turkish situation. Huge global stories going on right now. And they're probably wondering, what do they do with their investments, their 401ks? What do they do?
Yeah, it's tricky. When you step back, we're really effectively sort of going through a few different regime changes. And this transition is happening at different speeds.
Should the market go through a regime change? In other words, stocks have been king for 9 years.
Yeah.
Is it time for U.S. stocks to switch out to something else?
Well, I mean, this is a little bit of a non-answer in a way, but it's the reality, which is that there are, there's just so many different factors sort of driving these transitions all at once. What I think is important to look at is that basically the economic picture in the United States is pretty strong. The earnings situation is pretty strong. But getting those, low volatility, double-digit returns that we saw, last year, for example, in so many years since the 2008 financial crisis, that's just not going to happen as easily, right?
Do you feel, though, you're right, everything is good, but what it feels like is there's kind of a brewing storm. And things are good, and you're in the house, and everybody's getting along, and things are going great. But you wonder, is that storm going to bring down some trees? Is it going to do some damage to your home? And I think the trade war fear is kind of like that. It's overhanging. We don't know exactly what it's going to do. Right. How does the trade story end ultimately?
Well, that's my analogy here is it's a little bit like Brexit, right? Big scary headlines and
a lot of doomsayers going on all kinds of media
and big implications. But the process by which we understand what Brexit really means or how it is resolved is something that takes months, quarters, and really years. And the trade, we're all trying to sort of sort through where are the second order impacts for trade. You have the headline numbers on tariffs, but then what is the impact on CEO confidence? What is ultimately the impact on consumer demand, inflation, real earnings, and all that? So
we have yet to see a CEO come out that I know of anyway. Maybe there's one I haven't heard from, which is, we're lowering our outlook on trade war fears. That has not happened.
Correct, right.
We've had some CEOs make concerning comments about currencies, which are second tier or second derivative reactions.
Correct. Look, there's several CEOs that I know that are not fans of the trade wars, but the sentiment surveys don't show that there's a real collapse in sentiment there. But that's obviously one thing to look at. But this process, Brian, is something that really just unfolds over a long period of time. So when you think about the VIX being down at 12 last week, why isn't it up at 25, with all these scary headlines? It's because the process it's just unfolding at a slow pace.
It's a little higher. Gold's not. I get your point. I mean, the quote, the fear gauges. First off, I don't believe in the VIX anymore because of changes to the options market. But even if you look at gold, it's not saying people are panicking and there's fear in the streets and everything like this. But not yet. I mean, nothing's a problem until it is. But you're not changing your S&P target. There's no reason to alter your 2850 target.
Correct. Yeah. Right now, I think what's really happening here is that earnings in the U.S. Economy are really pretty strong. There is PE contraction, right? We had a lot of PE expansion. It was really half the return over the last 6 years was PE expansion. Not so much anymore against the backdrop of higher rates and some of these geopolitical tensions. You're not going to pay as much for that stock for that basket of earnings.
Is a Netflix immune? I'm not going to ask you to recommend an individual stock, but would a Netflix be immune to all the trade war fears?
That's a big factor, right?
Like you get scared, you sit home and watch, binge watch Bloodline.
Well, but I think you're getting to this point about FANG stocks, tech stocks, and many of which have a real lack of economic sensitivity there. And once again, tech is leading the way up. And so if you look at Facebook, sure, if it gets its Chinese expansion plans may be on hold, but it doesn't have a vertically integrated supply chain into China, right?
Yeah. So it would like to.
Yeah.
China has something to say about it,
and so the economic insensitive FANG stocks are and QT insensitive FANG stocks, and arguably to a certain degree geopolitically insensitive. Those are amazing game-changing companies with just phenomenal earnings quality, not just quantity.
All right. Bottom line, a lot of big, scary headlines. According to you, Michael, no need to change your investment theory now, but if you do, let us know.
Yeah.
Right now, keep calm and invest on. Is that the best way to say it, I guess?
And recognize that this range-bound condition is going to likely persist for some time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.